All right. Welcome to Wednesday. Can you confirm on YouTube sound, please? And you can see the. Just do this. Do that. And you can see my screen in now. Yes? No? There we go. Oh, good. All right. All right. So, welcome to Wednesday, and welcome to the day 2 of the mentorship. So, I'm gonna briefly reiterate what we spoke about. You know what? Let me raise my desk so I can feel it standing up. It's easier that way. All right, there we go. All right, much better. All righty. So, uh, first of all, let me change the screen up a little bit because I want to show you something else. One sec. Window, Safari. All right. As you can see, the window. Oh, all right. So let's recap what we spoke about. What we spoke about last time. Most novice traders, what they lack is not the technical mumbo jumbo that you can all see on YouTube. All of the YouTube has valid systems posted. Okay, it's not a big fucking secret. The thing is, it's putting that system into proper context is what most traders lack. All right. What they don't simply don't understand the big picture context, and then they just basically yo-yoing between win lose win lose win lose win lose instead of picking their battles. The whole point of trading as a human is called discretionary trading. That means applying your brain capacity to know when to trade and, more importantly, when not to trade. And most people just want to bang out 25 trades a day. You know what I mean? So obviously, you're not going to have 25 amazing opportunities a day, and that's what algos do. But algos are there for short periods of time. Most of them need constant adjustments, and they have whole teams behind them in order for them to to make proper adjustments so they run correctly and actually are profitable. Most of them are not profitable. Most of the shit you see on internet is not profitable. All those algos, all right, because if the technical setup, I'll give you an example. If the technical setup shows you should be buying, and 2 minutes later there's NFP news, and you buy, and then the news happen, right? And the news come out negative for you, your setup is invalidated immediately. Why? Even though the setup was fantastic, it's not, because it's not about the fucking setup. It's about the context and where you are on the map, the daily map and the overall map of things that are happening, the macro themes. Okay, so if you're opening up an equity position at 9:29 and 9:30 is the cash market open, you're an idiot. But so you should be aware of all these things, as I've alluded to in the last stream. Now, let's take a look what news we should be paying attention to. We're going to go through the whole of month of January, and I'm going to show you which news matter. Okay? And I'll tell you how they were interpreted by traders. Obviously, this was New Year's, blah, blah. So go to forexfactory.com. You see all this yellow folder news? Irrelevant. You can log in. Calendar. You can leave the orange ones, but if you really don't need them as well. All you need are the red folder news. So the core CPI. What the fuck is a core CPI? You click this fucking folder, and it says what it is. All right. It's the core price inflation. Okay, so it measures inflation that Federal Reserve, the Fed, looks at, and as the inflation comes, the number core inflation comes down, right? That the expectation of Fed lowering interest rates, thus devaluing the dollar and upvaluing everything that is trading against the dollar, goes up. Again, it's not 100% guarantee, and one day jitters don't uh, uh, create a whole picture. It's an ongoing theme. And if Trump is pressuring Powell to lower interest rates, he's already out. He's multiple times has called him a fucking retard out of the public, and he's gonna replace him with a yes man, yada yada. Now they open up a criminal investigation against Powell. All that jazz. What do you think the rates of United States are going to do? So you can go to central bank rates. This is on Forex Factory again. So we are at 375. If we go to zero and everything else remains the same, what do you think is going to happen to the value of this dollar? It's going to go down. Obviously, other central banks are playing the same game so they can lower their interest rates as well, right? So, um, so it's not just right now we're starting to look just at the United States, but it's in the context to really in relation to other central banks. But for now, concentrate on the United States as a primary one that will enable you to become simply profitable without all the extra bells and whistles. Okay, if you just pay attention to United States, it will give you enough economic understanding of what's happening in the world and how to position yourself. All right. So if United States goes from 375 to zero, which is what Trump wants, this is why you're seeing the reaction you're seeing in stocks, in gold, because everything else that is priced in dollars will rise in value because of devaluation of the dollar. All right. So anyway, write it down. CPI, yes. Core PPI, which came out today. This is the consumer price index. This is the producer's price index. All right. So these are unemployment claims. Irrelevant. We're just going to go through quickly. Forget about all this CAD, blah, blah, blah. Unless you're trading USD CAD, forget about it. For now, or Aussie or pound, yes, you can keep a track of it as you get more progressively advanced in trading. But for now, just keep it simple, stupid, right? Kiss simple principle. You need to focus. Just focus. Keep an eye out. It's like when you start driving. When you've been driving for 10 years, you can look like this. You can be chilling with one hand on the steering wheel, right? And you're aware of what's going on over there, over there, over there, over there, over there, right? You can have a conversation, listen to music, do this. You can do 20 different things and drive a car. But when you first started driving a car, and I know many of you 18, 20-year-olds have never driven a goddamn car living in the city, but now that's the analogy you're gonna get. So basically, when you start doing something new, you're so tunnel vision focused that you're not gonna be able to be driving like this and talk and be on the phone and eat a sandwich and blah blah blah, all that, all at the same time. So that's why you start first at the core task. Core task here is United States. United States sets the, when, as they say, when the United States catches a cold, when the United States starts coughing, the rest of the world catches a cold, right? The flu. So as U.S. goes, everything else follows through. So it trickles down to everything else. Thus, the news you should be paying attention to is CPI. Uh, CPI, core CPI, PPI, and let's see, GDP numbers, core PCE numbers. You can read all of these things, right? And as they manufacturing PMIs and services PMIs, but the United States. Where's the United States? I'm looking at French shit right here. PMI, services and manufacturing. So this Friday, not this 23rd. These numbers talk about how the economy. These numbers measure the economic output of manufacturing in the United States and the services industries. Okay, if they come in soft, that means that the Federal Reserve needs to stimulate the economy more. That means they have to drop the interest rates. It's all about the fucking interest rates, okay? Because everything gets priced on the amount of money you can borrow and repay the fucking banks. As banks run the motherfucking world, all right? Not the goddamn candlesticks on the fucking chart, all right? So you need to understand what banks are doing before you start considering of becoming a millionaire in Miami on a Lambo. Forget about all the dumb shit you see on YouTube, for crying out loud. What you need to concentrate on is how banks and institutional players look at the world through their filter. Once you see their filter, how they look, which prism they look through at the world and at the events that happen, that's when you can figure out this game. This is a game. You're playing against other very, very well capitalized, very smart, Ivy League educated motherfuckers. And here you are, the dipshit in whatever fucking corner of the world you're sitting, and you're thinking, I'm gonna watch a YouTube video on the candlestick does this and then it does that, and I'm gonna make $1 million, right? Or the double dipshit would be is the guy who paid for that fucking course to begin with, from a fucking 20-year-old, right? So forget all the dumb shit and listen up, because this is not being taught by anybody to this is why most 90% of people are fucking losers in trading. So write it down. All these news I'm highlighting is for your own good. And then the last once a month, you're gonna have an FOMC press conference, federal funds rate, and FOMC statement with a press conference to follow. Usually happens at 2 p.m. Right? This is when the Federal Reserve announces, are they cutting interest rates? Are they keeping them the same? Are they going to raise it? And they're going to give you forward guidance. This is what happens during the press conference, right? So if you know that the market is expecting to for a rate cut to come, and Federal Reserve Chairman comes in and says, yeah, the shit is bad, we're going to start cutting interest rates because the economy sucks and the data sucked. All this data that we looked through in the beginning, from the beginning of the month, right? If it comes in soft, that means that imagine your economy is you're benching in the gym. You're benching, right? And you're struggling. Somebody comes up and spots you and help you do that last set. So that's the function of Federal Reserve, according to whatever. But that's the function. It assists the economy and manages the economy, so it's in that sweet spot. And if throughout the month you see negative data in the United States, that means that the Federal Reserve is more likely to act on that data and to assist the economy and they only have a few tools available to them to do their assisting. They can cut interest rates, or they can do QE, quantitative easing. Another word, print a shit ton of fucking money. What they did in during COVID. All right. That's why the prices went through the roof, because now you have a lot more dollars chasing same amount of goods and services. All right. So this is paramount. Without listening to this and watching this, you shouldn't be fucking trading at all. At all. If you've never fucking sat through a FOMC press conference, you have no business of trading live money at all. So do yourself a favor, on January 28th, and it's going to be Wednesday, and cherry on top, I will fucking do a free lesson on that date on January 28th at 2 p.m. We're going to sit for 2 hours, and it's boring as shit. Yes, it's boring. It's not fun, but making money is not fun. Whoever lied to you about making money is all about excitement. And I put a trade here, I put a trade there. This is how you get fucking sucked into the casino mode, where you get fucking broke. All right, the people who create the excitement in the markets, the price action, the way it's manipulated specifically so you get excited, is there to take your money away from you. So you need to understand that, and you need to not act on your emotional responses, because 90% of people, you see the price action, everything is flashing, they get excited. Yes, it's going to go up. The minute you enter, it turns the fuck around and then it hits you up your stop loss, or it keeps going until you fucking get liquidated and all your money is gone. Right? How many times did it happen to you? That's why. That's why. That's why you need to sit on your fucking hands and do nothing, and only trade when your setup sets up in a proper context. All right, not just because a stick looks like this on a screen. That's not a setup. That's a dumb way of. That's a 100% way of how to lose money. So that's why I'm not showing you any entries yet. I'm teaching you first the big picture so you can understand what the fuck to do first and understand where you are on this fucking map of things, right? It's imagine I'm gonna drop you off to Mars and you don't know shit. Well, right? So you are a god that you were just dropped off. Most of you who have been trading less than a year have no clue what the fuck is going on still. Most of you don't, because it takes years. And even people who are, like I said last time, 80% of hedge fund managers do not outperform S&P 500. 80% of them, majority. Why is that? So they're very educated, they're well capitalized, great bullshit artists, smart kids, smart men, women, but yet they still, because we're all susceptible to these emotional triggers, and it's all about controlling yourself and not fall for those traps, because market is there to it's an efficient mechanism to siphon off all your fucking money from you by people who design it, who are better players than you are. It's like you playing basketball against Michael Jordan. Who's gonna win? Not sure as fuck, not you. Okay. So until you at least understand the rules of the game, the big macro picture, and you start doing the same things as big dick players, the institutional players, that's when you're gonna start understanding at least where you are and how to act. Because right now you have zero fucking understanding. So when this with by understanding what Federal Reserve is doing, by listening to the boring stuff, you will understand how they are positioning the market for the next month or 2 months or quarter. Because businesses don't operate just because it's a Wednesday. Businesses don't make 3 billion different decisions that oppose the same decisions they made yesterday and day before yesterday, right? It's these are not speedboats. These are not jet skis. These are behemoth Titanics, big cruise ships that swim, and it takes time for them to turn around. The economy is that way. All right, it's a big cruise ship. You are a little dipshit on a jet ski at best. That means you have a few $1,000,000 to trade. Most of you are just dead in the water. Help me, and and I'm the one who fucking helping you again for free, because I'm sick and tired of these fucking YouTubers charging you money for dumb shit that they teach without giving you context. Most of you will, I don't know if you're gonna ignore it, not ignore it, whatever. That's not my problem. But most people don't want to do the hard work. They want to do the easy thing. Oh yeah, I'll pay you $1,000, and you're gonna show me a system which I can definitely make money on. Yeah, yeah, sure. Give me $1,000, and here's, yeah, just do this. You see this stick, like it's gonna go like that. Just buy there. Yeah, yeah, yeah. That will work for sure. Right. So if you want to be one of those suckers, everybody has to go through that. You get, it's like getting punched in the face. You get punched in the face when you stop, when you realize that it hurts, it sucks, and it's not pleasant. You'll stop doing the dumb shit. It's like putting your hand on the hot stove when you're a kid, right? So the equivalent of putting your hand on hot stove is listening to a 20-year-old who is asking you to give him $1,000 to he's gonna tell, yeah, I'm an expert. Sure. It's like like a child, a 12-year-old kid in a lab coat says, yeah, I'm a doctor. I have a stethoscope. This is who you're fucking around with. Anyway, long story short, before you start executing trades, understand what the big bankers, big money is doing, the institutional money, how they are positioning themselves. And they position themselves based on the data that gets released throughout the month. Let's take a look at the February. I know it's boring, but trust me. Again, United States, ISM manufacturing PMIs. All right. These are, again, you can read about every single one of them here. You don't need to, and if it's above, it indicates expansion. What if it comes in and look where it came in the last few times? Do you see that it's dropping? It's coming below forecasts, right? Last 3 months below forecast. So what does it mean? That means that the Federal Reserve is likely to cut interest rates because they need to stimulate the economy to get it back into its balanced, healthy way. That this says it's not healthy. All right. This says the Federal Reserve, in this instance, acts as a doctor to a patient. The patient is the economy, and the patient is limping. So you give him a little fucking shots of steroids so the motherfucker starts walking. All right. And the steroids is called interest rates and money printing. All right, just put it simply. So again, you should read all. Yeah, do you? Oh, I have to read. Yeah, motherfucker, you have to read. So you will have to read every single one of these reports that I'm highlighting for you. I'm already doing half the work for you. I'm highlighting, showing you what you should pay attention to. So in the month of February, manufacturing PMIs, is it going to come in less than 50 and less than expectations? Trust me. That means, again, the market will react by thinking that the Federal Reserve will be cutting interest rates. That means that the stocks will rally, the gold will go up, and the USD, again, in as a rule of thumb, will go down. Not against everything, against, if it's Turkish lira, which has even worse fucking situation, then yes, US dollar will remain the same. Yes, against Japanese yen is going to be a different ball game. There are exceptions to every rule. But as a general rule of thumb, that's what happens to a currency when everything else remains equal. It's the value of US dollar will be going down as the interest rates come down. All right. So ISM number one. See this Joel's job opening, red folder, USD, irrelevant. ISM again. Remember the ISM, manufacturing and services. Same thing as here. You open, you read, etc., etc., etc. Services are doing better than the manufacturing, but remember, Trump is all about bringing manufacturing jobs in to America, right? So you have to have context. It's not just all black and white. You have to understand what the fuck is going on, right? So if you follow politics and you know what Trump stands for and what he was trying to achieve, whether you like the guy or don't like the guy, it doesn't fucking matter what you like. Nobody cares what you like. It's about what he's trying to do and what he's pushing through, right? If he's pushing through manufacturing jobs by creating tariffs and trying to bring the manufacturing on U.S. soil, right, as a lot of companies have witnessed with like car manufacturers to tech companies, right? That means that just because what I'm trying to show you here is this. How do you interpret when one says up, one says down, right? So the ISM manufacturing PMI says shitty numbers. We need to cut interest rates. ISM says the services, they are doing okay. We're doing okay. We don't need to do anything. So how do you juxtapose these two things? You have to then give more context and understand which environment you're in, who is playing what tune. And Trump is playing tune, cut the fucking interest rates, bring in I'm going to raise tariffs and create a wall so everything gets manufactured in the United States so the blue collared people get the fucking jobs, that they can stand at the factory and do this. All right. That's what he's been promising, and that's what he's been doing all along. All right, unemployment claims, irrelevant. Obviously, the big kahuna, the big thing that measures is the non-farm payrolls, right? NFPs. Where's NFPs? Unemployment. It's non-farm employment change, right? You can read all about it. If you have never traded through NFPs, you have never traded, right? You shouldn't be even trading. Plus, you shouldn't be trading on the Friday on NFP Friday, period. Because it has particular market signature. and only professional traders should be trading NFPs Friday. Okay, because there's an initial reaction, and then they drive the price in the opposite way to stop out all the morons. It basically moves in threes. You have a fake, then a blowout to stop out the first fake move, and then you get a real move. So without experience in the markets, you wouldn't know that. You're like, oh, okay, the number is this. Let me buy. And this is why you get stuffed out. This is why it's super volatile, and you have no idea what the fuck is going on. And to you, this is just madness, right? So that's why you need to be aware when not to trade. This is one of those days when you shouldn't be trading, the NFB Fridays. All right. So the employment change, obviously, and then the unemployment rate. It tells you something about the economy, right? And then we repeat the cycle again. So Wednesday on the February, well, you get the CPI, the core CPI, then you get the retail sales irrelevant, core PCE, price produces core whatever the expenses consumed by individuals. Okay, so again, read not as important, but advanced GDP, it's okay. The most important ones are the flash services PMIs, advanced GDP, and the big ones are the CPIs, the core CPIs, CPIs, and the non-farm employment change. Right now, NFPs and an unemployment rate, because it gives you the big, and then obviously the FOMC when they actually tell you what the hell is happening. So again, and you go through this process every month. Every month, it's the same thing. They're gauging the temperature of the economy, of the market, of the financial situation in a country called the United States, and every country does that. Every country, it's just barometers, right, of how economy is doing. And if economy is not doing so well, you're not gonna wait till it fucking collapses. So you're seeing that there's a problem over here, so you do something about that problem. And these things are just telling you where the problems are, where the problems are not. And Federal Reserve job is to make those adjustments. Okay. So that's why it's important to understand the big picture before you start dicking around on your charts. Um, let's take a look at the markets. One sec, and see what's happening. How do I do that? One sec. Window. All right. So as you can see, the gold, um, the gold is kind of stagnating, consolidating, because but the silver is just keeps on ripping. As they call silver the poor man's gold. Gold has been ripping for a while now, right? So let's take a look at the weekly chart. This is a weekly chart of gold. I've explained to you why it started ripping, because of United States signaling that they're going to start lowering interest rates. This started happening at the same exact time. So you understanding that Federal Reserve is cutting interest rates, meaning devaluing the value of the dollar. See that XAU USD? So one component is gold, right? XAU, spot gold. One component is US dollar. One of it remains the same. One of it keeps going down, right? So if this component goes down against the XAU, XAU goes up, okay? So this is why the value of gold has been skyrocketing in the last month, in the last 2 years, Jesus, and the last month, right? Does it mean that there are pullbacks? This is why they say buy the fucking dip. Yay! Now you figured it out. This is why you buy the fucking dip, because when the fundamental situation has not changed, you buy the fucking dip. If the fundamental change, if there is a big fundamental change, for example, Federal Reserve does a 180 and says, you know what, we're raising interest rates. You know what's gonna happen to gold the minute that phrase is uttered? You're gonna have a big fucking stick the size of your screen, coming down like this. All right, but markets do not move in one straight line. Markets move in ebbs and flows, right? In waves. One wave, pullback. Second wave, pullback. Third wave, pullback. And your job is not to buy when it's ripping. So I buy here to sell it here. Your job is to wait for this pullback to happen and then uh, resume the trend to resume the major trend. Okay, so this is why you look at the daily, weekly. You mark large, big levels, and see if there are reactions off of those levels. And again, for example, I want to buy gold when it dips. I'm not going to be buying here because I'm late to the party. If you want to use one of your favorite oscillators, RSI, for example, you can see there's divergences. This is risky. This is not a high probability buy here. A high probability buy is okay. Is the Federal Reserve still lowering interest rates? Yes. So the direction is still up. Yes. All right. There might be some temporary news that comes out. You're going to have one of these scenarios, and that should be viewed as an opportunity for you to buy. And before, I'm not going to get into too many technicals, but this is the wave up. This was the this was the pullback, right? And you can see when the pullback was over near the previous support area, right? So this was the breakout, retest, continuation that I've been teaching for since fucking forever. Breakout, retest, continuation. So same thing here. I'm waiting for this breakout, retest, continuation, plus there's a small gap there. All right. This is when the ICT or the smart money concept comes in. He's right about gaps. All right. And the reason why he's right about those gaps, this was an opening gap here. And it's more visible on probably on this chart. Maybe not. 1 second. Wow. So there's still this gap right here. Still, trust me, it will be closed at some point. 99% of gaps get closed. It takes a while, but they get closed. So same thing here. That's why I have it marked, because once it closes, I sure shit will look for that's when you use your fucking candlesticks to buy, because again, when I see this next to a big level, that means maybe the pullback is over and we're going to start restarting the movement back up. And so the price action will be evident in the form of the candles. That's when you use your fucking candlesticks, kind of like you do here. You see the support area, right? You see this candlestick right here off at this level. This is why you mark big levels. You see that they tried to sell it. Oops, 15. Oh, come on. One second. No. Jesus Christ. I don't know why it's crapping out. 1 sec, boys and girls. One second. Mm-mm-mm. Oh, come on. There we go. All right. So you can see that this is why you mark big levels. You can trade on a 15-minute. You can trade on a 1 hour. You can trade on a 4 hour and a daily. You mark big levels, and when you see reactions of those big levels and continuation trades, that's the trades you want to take. Understand for it, but first you understand where the flow is flowing towards, right? You don't want to swim against the river, against when you against the river. You don't want to be pissing against the wind. You don't want to swim upstream, right? You want to go with the flow when it trades. If the flow is up, oops, when the flow is up, right? When the flow is up, all you should be thinking about is where the fuck do I buy the dip? That's all you have your thought process should be. Again, nobody teaches you. They're like, yeah, I can trade here. I'm going to sell right here and buy right here and then buy right here and then sell right here and all this fucking nonsense. And what's going to happen again? You're going to lose money. That's what's going to happen, because people are, yeah, I'm going to short, because you're starting to look for wrong patterns. And we're trying to identify winning patterns and take advantage of those winning patterns. When you start looking for everything, you end up, a jack of all trades, master of none. All right. So when the big macro picture, first, big macro picture, if the direction is telling you it's going to go this way, and you see that the weekly, daily, everything's pointing that way, right? That's when you use shorter time frames to when you catch pullbacks to see when the trend will resume itself into the direction of the long-term trend, because nothing moves in a straight line, right? So your job is to wait for this dip and a turnaround sign. That's when you take your trade. All right. And if it doesn't happen for 3 days, you sit on your fucking hands and you don't do anything for 3 days. Yes. All right. If sometimes it gives you 5 trades a day, okay, fine. But most of the time, you shouldn't be taking more than 1 or 2 trades a day as a novice trader. And every novice trader makes that mistake, including me. I tell the story all the time. My first job, my first big gig at a fund, my boss would take 2, 3 trades a week. I would take 5, 7 trades a day. At the end of the week, he would be up in percentage terms. Obviously, he was trading a much bigger. He was managing a much larger portfolio than me, right? Obviously, but in percentage terms, he would have 4 or 5 trades. 3 of them were great fucking trades. One or two loser, one a loser, one break even. And in percentage terms, he would be up nice, right? I would take 5, 7 trades a day. 90, 80, 85, 90% of them would be plus minus, plus minus, plus minus. And at the end of the week, I generated a lot of fees for the broker, for the bank. I was trading with JP Morgan. So I would pay all these fees, right? The spreads, the swaps, and nothing to show for it. Okay, so this is a common mistake, and this is why when you watch all these YouTube videos, it's all about scalping, man. I want to be on 1 minute chart. Yeah, all right. So let me give you a F1 formula car right now. I'll give you F1 formula car against fucking Lewis Hamilton and say, win, motherfucker. Are you gonna beat him? You won't be able even to get out of goddamn garage before crashing, okay? Because you need to know that you need to warm up the tires, you need to do this, you need to do that, blah, blah, blah. There's slicks, right? Gazillion different things you need to do. You have no fucking chance. No chance. So why are you playing around on F1 if you don't know, if you don't have a driver's license? You have no driver's license. You never drove a fucking car. Maybe you drove it once, right? And now you want to be an F1 driver. Forget about that nonsense. That's just there to extract money from you. So stop believing these stupid stories. Forget about 1 minute charts until you've been trading for at least a year. All right? And then if then you want to dick around a 1 minute chart, be my guest. But by then you'll see why am I gonna be it's see the trading on a 1 minute chart is like sifting through a major pile of shit for a little speck of gold, because most of the signals on 1 minute charts are dog shit. When you can just on a 1 hour, 4 hour, and daily, this is where the big players make their decisions and moves. So you get more stable signals. There's less noise, more stable, and better signals. Okay, the probability of them occurring is higher. So I don't even go to 1 minute charts. I don't. Why am I going to agitate myself if I can take the limo ride to my destination? All right, and make my 5% this week or whatever, 2, 3%, and that's it. And that's all you need. You need 2, 3, 4 trades. You make, if 2%, 2% a week, 3% a week. All right. On $100,000 account, that's 10 grand a month. You made profit that you can put in your pocket and walk away with other people's money. You don't even have to have the fucking the 100 grand. You can get a prop firm account and get the 10K put into your pocket. And you paid what, $500 for it? This is how you use the prop firms. This is how you utilize it. All right. Not gambling. Now let me just YOLO. Let me just put one trade. Yes, yes, no, no, and then buy another account, buy another account, buy another account. It's again, you have to kill the gambler inside in order for you to become profitable in trading. All right. So on that note, All right. Like I said, on this note, we've been doing it for an hour, a little bit less than an hour. I'm gonna save your questions. I know there's a lot of questions, so save your questions uh, for Friday. Friday, I'm gonna do Q&A, and I'm gonna start showing you more and more of how to enter the trade, how to do top-down analysis, and how, which I can talk about, which indicate this is this proprietary momentum indicators here, but I can share them with you if you want to. Um, you know, so you can see that the momentum has been positive ever since gold has been at 3,500. We're at 4,600. Yeah. So uh, anyway, just trading this indicator, you can make a shit ton of money. But anyway, on Friday I will do Q&A because I can't split my focus between question and answers and then go on tangents. So I want to keep a little bit of a structure. So Mondays and Fridays, I mean Mondays and Wednesdays, we at 9 a.m. we do those. We do these lessons. Friday we do Q&A. You can ask me any advanced or simple question you want. You want to ask me, well, don't ask me about fucking how the candlestick works, okay? Something like that you can get on your own. But if you're a dollar yen trader and you have a specific dollar yen question, go ahead, ask me. I'll answer. I'll explain to you how dollar yen operates, how Swiss or gold or silver or Martian fucking jizz. I don't care. Whatever. Right? It's all the same. You can take I can look at any chart and tell you what the fuck is going on that chart based on the macro understanding of the environment and then the reading the price action, because this is the doesn't matter what chart you look at. It's just it's psychology on a screen, psychology in action. All right, of cumulative sum of all players. So once you understand how the traps are created, how liquidity, what happens when there's a liquidity grab event, et cetera, et cetera, et cetera, you will start understanding how the big boys playing between themselves, so you don't get caught on the wrong side of things. All right. So charts is just evidence of the. You need to learn how to read price action. Okay, you can buy books, you can buy courses, or maybe go Google how to understand and read price action, so you can have a basic understanding. But it takes time, and this is basically telling you what's going on, and it confirms what you already know from the fundamental side of things. Okay. It's a reflection of all the price, of all the decisions that were made on this particular instrument by the traders, by the trading community. And it's quite telling. The way the price action forms tells you different pictures. It paints different pictures, right? So reading it, understanding it, allows you to see who's trapped, who's fucked, who's not fucked, who's doing what, for what reason, etc., etc., etc. Okay, and it gives you pretty decent probability of what the fuck for you to do to make money in this particular environment. So on Friday, you can ask me anything you want. You can just ask, how do you trade in 1 minute? How do you trade on a monthly? Or anything in between. And I'll start. We'll also take a look at how to look at interest rates, why you should be looking at the interest rates, expectations of interest rates, et cetera, et cetera, et cetera. Okay. And we'll do half and half essentially. First half of Friday, I'll do a quick lesson, and then we'll do Q&A. So ask me anything you want. On that note, I thank everyone for joining. I hope it's going to be helpful. Spread the word. I'm doing this from because I want to give back something to community, for trading community, because there's so much misinformation that it annoys me. It annoys me. I live in Miami. I have fast cars. I have a very big place. And I know all these fucking guys. I see them in restaurants. I see them in clubs. I see them on the streets. I see all these fucking fake motherfuckers who are literally selling you garbage, and they're not traders. All they do is take your money that you pay them and spend it on bullshit. All right. And then show you the Instagram lifestyle. Oh, look at me popping bottles. This is me. You should be looking at that as saying this is just him fucking pissing away money that you paid him, on the knowledge that is fucking worthless. All right. So stop buying dumbass courses unless somebody's gonna literally, who has a track record of winning, teach you how to do it right next to him, like what I'm trying to do. Don't pay any fucking money for any of that shit. All right. So, yeah. On that note, I'll see you Friday, 9 a.m. And yeah, thank you all for coming. Spread the word. Again, this is free. I don't know how this is time consuming for me. This takes time at 9 a.m. It's my prime time. Okay, I'm giving you a lot of my time at the most busiest time of the day. I don't have to do this, but I'm doing this. So tell your friends, stick around. In a couple of weeks, stuff will start making sense, and hopefully you'll be profitable in coming months and years. All right. And if you want to trade with fundingtraders.com, more than welcome to, because now I know that you understand what the fuck you're doing, more or less. All right. On that note, cheers all. Hope you have a profitable day, week, and I'll see you Friday. Thank you.